All right, good evening all. This is Ajit Mishra and welcome back to the webinar Week Ahead with Religare Technical. So, as most of you know that we talk about market performance in the passing week, followed by our view on the key indices, both Nifty and the banking index, followed by which all sectors, which all stocks that should be on your radar for the next week. And post the webinar, we'll do a quick poll and followed by the Q&A session. So let's start with a quick disclaimer that the observations which are shared during the webinars are only meant for educational purpose. It's not a trading or an investment recommendation. So before making any trade based on the information shared, please take advice from your investment advisor. Now talking about the indices, so those who have joined us, last time also means through the video post that we've shared that 16,800, 17,200 was the band which the in Nifty index was trading in. And post breakout, we were eyeing 17,600. So we have tested that mark. Nifty and Sensex both managed to gain nearly 1.5% each for the second consecutive week. If you see the sectoral performance, mostly sectors ended with a positive tone, where in reality financial services, pharma, media, auto, they were the top gainers, while the energy ended marginally in the red, means almost on a flat note. Talking about the stock specific performance in the Nifty 50 basket, we have a couple of names from the financial services majors like Bajaj Finance, SDFC Limited. Then we have L&T, a post almost a month-long consolidation. We've seen this breakout and the stock gained roughly around 5%. And other than that, two stocks from the auto basket, Tata Motors and Bajaj Auto. So these were the top 5 gainers from the Nifty 50 basket. Now on the losing side, if you'll see that we have stocks from across sectors. The first names, BPCL from the OMC space, shared nearly 4%. Then we have Apollo Hospital, Axis Bank, TechM, and Cipla. So these were the top 5 losers within the Nifty 50 basket. Now come what we are anticipating in the key indices for the next week. We'll talk about Nifty first, and then we'll discuss about banking index. So talking about the Nifty index, we were here last week, right? And it was a holiday shortened week. This week, almost all the 4 trading sessions, we saw that index inch higher. Why is it so? Because earlier we had this consolidation range, 16,800 to 17,200. On Monday itself, we opened with a gap up above the resistance mark, and since then we are seeing this gradual up move continuing. So what is our view for the next week? So this channel, if we match all the previous highs and previous low, we get this channel in which the index is trading in. So we are very close to the upper band of the channel again, which is close to around 17,700 zone. So now after this recent uptick, means this recovery, there's a possibility that index might take a breather. So indications are in the favor that we may see some consolidation first, and then finally an attempt to test this band, which is around this 17,700 area. So this is what we are anticipating when it comes to the index. But during this initial consolidation, we expect the positive tone to continue. And why we are saying this? Because earlier it was banking, FMCG, and selective stocks from the pharma basket which were helping the markets. Now there's other sectors also which are pitching in. And needless to say, next week the earnings season also about to kickstart with the 2 IT majors, TCS and Infosys, and SDFC Bank from the banking basket will be declaring their numbers during the week. So after this recent outperformance by banking, FMCG, financial majors, we expect this IT, energy, auto counters also to pitch in. So as of now, what we are anticipating that yes, since we have critical resistance around 17,700, there's a possibility that we might see a breather, but the tone is likely to remain positive, taking clues from the other index heavyweights. So above 17,700, yes, this is important. That what if we manage to cross this level of upper trend line or this upper band of the declining channel, then this previous swing high is going to be the next major hurdle. Around 18,100 plus zone would be the next area where Nifty might face a resistance. Plus, another important aspect is that since we were trading in this band, this channel for last 4 months, it will also trigger a short-term trend reversal, right? So in both the situation, the positivity which we are seeing in the market is likely to extend further. In case if we see any dip, then this zone, 17,400 to 200. So earlier it was resistance, now it should act as a support. The 17,200 to 400 zone would act as a cushion in case if market witnesses any profit taking in the coming week, right? Now coming the key indices, the key sector which helped the index to initially witness this recovery. So banking index, again, it traded largely in tandem with the benchmark index, but today, means on Friday, it ended almost on a flat note after testing this trend line hurdle. So again, in line with the Nifty, we have this resistance on banking index also. It's not comparatively like, a similar situation because in Nifty, we have a proper channel in place. But in banking index, this zone was more of like a consolidation band and, it anyways, outperforming the index. Why? Because it's holding above the major averages already and, very close to the previous swing high as well. So what we are anticipating in the banking index, so this trend line hurdle, this, this red line, that will remain a key hurdle for the index. So this zone is 41,200 to 41,400. So this zone is the key resistance area. Today also we have penetrated that area for brief, but we couldn't sustain, right? So this is what we are anticipating, that again, in line with the Nifty, we may see some consolidation first, and then maybe during the week, we see resumption of the trend. But for that, we need to hold these levels. This 40,600 to 200 zone, this area, this green line and slightly below this level and closer to this area. So this zone would be the key support in case if we see any profit taking in banking index. But the interesting aspect is that last week, in fact, from last couple of weeks, we were discussing this, that private banking should be preferred in comparison to the PSU pack, and within the private banking space, we feel that Axis and ICICI could outshine. But it turned out to be otherwise, that both HDFC, ICICI and Axis, they didn't show like, much strength, or means the participation was limited. It was the SDFC twins, it was the Bajaj twins, which, fueled the momentum or helped the index to inch higher. So still we have room when it comes to private banking majors from the stocks like Axis, ICICI, Kotak, wherein we can see further momentum. So keeping that in mind, above this trend line resistance, again, this zone close to around 42,000. It's multiple resistances, basically this area would be the next key hurdle for the banking index. But all in all, for both the indices, the tone is likely to remain positive, but with some consolidation initially, and then followed by the resumption of the trend. Now, let's talk about stocks which should be on your radar. So AB Capital, we have discussed, in the past webinars also, for the obvious reason, because very few stocks are like, holding very strongly despite the ongoing, correction in the markets. So AB Capital post this, major consolidation range breakout, formed a very strong and a very compressed trading range on the weekly charts. And now it looks set for the next leg of the up move. So AB Capital, as a disclosure, we have recommended to our clients also that they may have position. So this is likely to, initiate the next leg of up move. So AB Capital is one stock which you can definitely look at from the buying perspective next week. Next on the list, after a prolonged period of consolidation or underperformance, again we are seeing a bit of a recovery or a rebound in select reality counters, and DLF is leading from the front. So why DLF? If you see this trend line, these last two lows we have joined, and this was the area basically where DLF tested last time on the weekly charts, and now we are seeing gradual recovery. So this kind of formation wherein we have upside also capped, but it's respected the major support of trend line plus the major moving averages on the weekly chart, and now we are seeing this decisive close, almost 7% kind of gains. So keeping this indications in mind, we believe that the stock has potential to retest the previous trend line hurdle on the upper side as well. So close to around 400, 410 could be the area where it might progress next week. So DLF is the next candidate, which looks positive to us. Now, stocks which are looking slightly wobbly or the tone looks negative. So Apollo Hospital is the first name in that list. Why we are saying this? So we have this distribution pattern you might have heard of, like head and shoulder pattern. So what this is something that the pattern looks like. This is the left shoulder, this is head, this is the right shoulder. So it's a kind of a distribution pattern. Means when somebody, a big institution wants to sell any position, they can't sell it at one go. At times they do, but in case if they want to they have a huge quantity to sell off, then they usually distribute that for particular period and during any particular price range. So this is what we are seeing in Apollo Hospital, that almost 5-6 months we are seeing this distribution going on, and it's very close to the lower band or the neckline area of the pattern. So possibility of means pause or further decline is high, and the underperformance which we are seeing in the stock is likely to continue. So, but fresh shorting is something that one should wait, because market tone is positive. So we are not looking for short trades as of now. So any dip below 41.15, then definitely it may witness the underperformance, further underperformance. Otherwise, it's more of range bound candidate with a negative bias. So use any bounce to go short in case if the market allows. And lastly on the list, Jubilant Food. So again, this stock we have been discussing for quite some time, a consistent downtrend. On every uptick, we are seeing selling pressure. This is a weekly chart and daily chart also. If you will see, it's holding, beautifully below this, short-term moving averages, which clearly indicates that bears are completely under control. So this week also that, after this recent uptick, again, it fizzled out, shed nearly 1.5%. And tone is something that we are still seeing, gradual lower lows forming on the daily chart. So indications are more in the favor that it is likely to remain under pressure or witness some consolidation around the current levels. This again, it's a counter wherein we can see underperformance alongside with the Apollo Hospital. So just to sum it up, when it comes to the key indices, both Nifty and Banking Index, some consolidation is likely because we are very closer to the resistance zone. For Nifty, it is 17,700 mark. For the Banking Index, is 41,200 to 41,400. So post this consolidation, tone is likely to remain positive, but a lot depends upon how the earnings season is going to pan out, because we are starting with the earnings season next week with three majors like Infosys, TCS, and SDFC Bank results scheduled. At the same time, stock specific, we are getting opportunities across sectors. So we have first name on AV Capital, which looks positive to us, followed by DLF on the strong side. Then we have Apollo Hospital and Jubilant Food, which looks slightly weak to us. So this is all from the presentation part, and now we'll do a quick poll and followed by the Q&A session. So please quickly fill this feedback poll, and then we can start with the Q&A session. So once you are done with your feedback, you can start posting your question using that Q&A tab. And please make sure that the questions are around the sectoral indices, not the individual stock specific queries. So anything which we have discussed, we are happy to elaborate on that. But anything other than that, please avoid any stock specific queries. Please quickly fill this feedback so that we can start with the Q&A then. All right, so now we can start with Q&A. Okay, so first question from Simon Das, that what we are anticipating once the Nifty breaches 17,700. So 17,700, a breakout, a decisive close of 17,700 would help the index to inch toward 18,100 plus zone. So there could be an intermediate, like, pause in between also. But the major hurdle post 17,700 is 18,100. And needless to say that the 17,700 is why it is critical, because not only the immediate hurdle, but also a area from where we are going to see the trend reversal in the index, short-term trend reversal. Okay, so next question from Benjamin on reality sector. So is this tone of positive performance will continue? So that is what we are anticipating, Benjamin, because we are betting on DLF to maintain the positive tone. So in case if DLF maintains the positive tone, then the sector is likely to remain on a positive side. But since we are entering into the earnings season, obviously a lot of factors comes into play, that how the individual companies are performing and announcing their numbers. But as of now, within the reality basket, Oberoi Reality and DLF, these are the two names which are looking very strong to us. The rest of the pack, like Godrej Property, still we are seeing it's reeling under pressure. Then we have Prestige also, wherein we are not seeing any traction. So be stock specific, DLF and Oberoi Reality, these are the two top names which comes across our mind when it comes to the reality pack. Okay, other than that, next question, the IT sector, that how we are anticipating. So it's important that since we are, we start the earnings season with the IT majors result. Both TCS and Infosys are going to announce the number. Of late, we have seen that, there's a kind of a divergence between the US tech indices and our IT majors. For more of like fundamental reasons, but now we are again seeing a catch-up move, especially in the mid-cap ID names. So as of now, what we feel is that especially when it comes to the IT major, HCL Tech is the best candidate in case if somebody is looking for a short-term trading perspective. It's looking like comparatively stronger, hardly participated on the down days. Both Infosys and TCS, they are still giving mixed signals. So as of now, within the IT majors, HCL Technologies is comparatively better, is what we believe. All right, any other sector apart from banking and financials? So yes, this is what we've shared, that apart from banking and financials, now it is important that the other sectors will also pitch in. So initial leg, banking, financials, FMCG is trading at the record highs. The other key sectors like energy, auto, they are the one actually they should also pitch in, and that would help the Nifty to cross the 17,700 barrier decisively. So as of now, if we talk about the Nifty 50 basket, performance, overall performance, only 22 stocks are trading above the long-term averages. Means that 200 is exponential moving average. Rest 28 are still below the long-term averages. Why we share this data time and again? If you remember that a month before we were at the number was 16. So 34 stocks were below the long-term averages. So that data has improved a bit in the recent weeks, but still we have a lot of catch-up move that we need to see in the Nifty 50 basket to make a sustained up move. So assuming that if more than 50% of the stocks are still below the major averages, but index breaks out from the 17,700 levels, possibility of sustaining that move would be very less. Why? Because we are very dependent on a select set of stocks to do well to maintain that positive bias. So at times it goes, works, at times it the move fizzle outs in no time. So this is something that one should keep a close eye on. So apart from banking and financials, other key sectors like auto, energy, and of course those who are doing well, their participation should continue on the rotational basis. The what we are anticipating. All right. So are we seeing this tone continuing in the pharma space? So yes, we are anticipating select pharma stocks to do well. So Oro Pharma, like a couple of weeks ago, we've discussed during this webinar, it's up roughly around 10 to 15% from those levels. Then we have Sun Pharma, which is the top stock from that list, which is holding around the record highs, gradually inching higher. But still we are seeing some of these stocks wherein we are seeing continuous underperformance. On the performing side, yes, Dr. Reddy, one can add to that list. So apart from that, majority of the stocks are still struggling. So as a sector, we are not eyeing any strong up move in pharma stocks, but yes, so stock specific, one can definitely look at the pharma counters. Okay. Can we select few metal stocks also for buying? So metal is something that we recommend to avoid for a time being now, because this is the only sector where we have hardly seen any participation during this recent uptick. And if you talk about the major stock in the metal basket, we are seeing very narrow range consolidation. So we need to wait for a decisive signal when it comes to the metal counters for any fresh up move. Okay. Any questions? All right. So we have answered all the queries. So thank you everyone for joining in. Okay. We have final question, I guess. So pharma, Rajiv, we have just discussed about pharma that selectively, yes, one can look at Sun Pharma, Dr. Reddy's, Oro Pharma, Glenmark. These are some of the good names which are continuously seeing traction. Okay, with this, we can end this presentation. Thank